Stephen Carroll is here. Stephen, welcome back. We're starting here in Europe, where the ratings agency Standard & Poor's has stripped the EU now of its top-notch credit rating.
Yeah, that's right. It's been downgraded, rather, from AAA to AA+ in this latest move by Standard & Poor's. This affects the credit rating of the 28-member bloc, not the individual countries themselves. This is to do with the EU's borrowing and its credit rating. It's not a terribly surprising decision, though. The EU has been on negative watch from Standard & Poor's since January of 2012. It recently, of course, downgraded France to AA, so 2 notches below that top spot. And while the other 2 largest economies in the EU, Britain and Germany, retain their AAA status, the Netherlands, another key economy that lost out recently, being stripped of its AAA rating. Now, S&P says the reason they've done this is because it is to do with the EU being less cohesive than it used to be. They're pointing to the recent budget negotiations, which of course were quite difficult and controversial for many states. It said that it was demonstrating that the support for the EU is wavering in some countries. It already has France, Spain, Italy and other EU countries on negative watch. There could be more downgrades to come. This will only affect, though, the EU's borrowing rating as a whole, and the outlook for the EU is stable.
OK, so a bit of bad news for the EU finishing 2013. But if we look ahead to next year, the picture's not looking very bright for France either. Their economic outlook for 2014 is not looking very positive, Stephen.
Yeah, positively gloomy. A sluggish recovery is what the France's National Statistics Office is saying will be ahead of France in 2014. It sees growth slowing to just 0.2% in the first 2 quarters of 2014. At the same time, INSEE says that the rate of unemployment will stabilise at the 10.9% rate it is now. Therefore, the government won't reach their target of reversing the trend of rising unemployment. Oliver Farry has the story.
Recovery will come for France in 2014, according to a report issued by the country's National Institute of Statistics and Economic Studies. But the downside is it's going to be sluggish. Growth will be 0.2% for the first 2 months of next year, with a slight rise by the end of 2014. President Francois Hollande is making of it what he can.
The report says sluggish recovery. So we can say there is recovery. It's sluggish. And it means we have to slug it out.
Employment will be one of the main fronts. The National Institute says it will remain stable, but more people are expected to enter the workforce. Prime Minister Jean-Marc Ayrault is not giving up.
For 6 months now, the youth unemployment curve has been reversed. Now, we haven't reversed the overall trend yet, but we are determined to. It's not 1 or 2 months. It's a long-term challenge.
It's an optimistic note from all in government, but right now the projected figures are not being so kind.
All right, how's all of that affected the markets then?
It's still a positive start in Europe, despite all that bad news. Investors obviously not terribly concerned about the news they were getting, neither in France nor for the European Union in general. In London, shares in the FTSE 100, as you can see, opened up slightly, but shares in the defence firm BAE Systems actually fell by 4%. This after the company confirmed they had lost out on a contract to supply 60 fighter jets to the United Arab Emirates, worth up to $10 billion, but it does leave the way open for France's Dassault to step in and perhaps win that contract with its Rafale jets. Its shares in Paris up 1.6% in trading this morning. Now, over in Asia, it was a slightly more positive picture at the close. The Nikkei managed to reach a 6-year high on Friday. This after the Fed announced this slight reduction in its stimulus program. And we also can see the Shanghai Composite, though, down over 2%. This as investors fear another credit crunch in China. Liquidity has been a problem there. The central bank has stepped in to try and pump some more money into the economy in the meantime, but it doesn't seem to have given investors any more confidence. Those shares still down 2%. Now, we'll stay with the markets, but at the United States now, where the 2013 has been the best year in more than a decade for stock market flotations. Now, a report from Renaissance Capital said that a total of 222 companies floated on the stock exchange in 2013, raising $55 billion. It's the best year since the height of the dot-com bubble back in 2000. Now, notable companies that enter the stock exchange this year include Twitter. They raised $1.8 billion in their flotation, and the Hilton Hotel Group, which raised over $2.3 billion.
Okay, great. Let's take us through some more of the day's company news now.
Okay, well, we'll go on to Facebook next. Facebook's CEO, Mark Zuckerberg, is set to earn up to $1 billion from his first sale of shares in the company since it went public last year. Mark Zuckerberg is also going to donate a similar number of stocks to charity. It's part of a complex share transaction at the firm, which is set to join the S&P 500 index of shares later this Friday. Earnings at Nike jumped by 40% in the 3 months to the end of November. Profits of the world's largest sportswear brand rose to $537 million. Sales were boosted across every region, with particularly strong figures for its Converse brand in North America, Britain and China. And a former manager at Microsoft is facing civil and criminal action in the United States over insider trading. Brian Jorgensen is accused of having given a friend information on 3 separate corporate events, which he used to clear almost $400,000 of trades. Both Jorgensen and Sean Stockey have admitted the charges, with the trader saying he paid the former Microsoft worker $50,000 in cash in exchange.
All right, finally, Stephen, Detroit's art collection could be put up to sale to help them pay off some of their massive debts.
Yeah, it had been feared that the Detroit Institute of the Arts collection might be sacrificed as part of this effort to pay off Detroit's massive debts, $18 billion in fact. It was declared bankrupt by a court very recently, in fact, and the auction house Christie's has evaluated how much the artwork is worth. It includes paintings by Van Gogh, Matisse and Monet. The total value of the collection up to $867 million. Helpful, but perhaps not quite enough to knock a decent share off that $18 billion debt.
Well, every little helps, doesn't it, I suppose? Well, keep us up to date on that and all the rest of the business news. That's Stephen Carroll there with the business headlines. Time now to take a look at what's been grabbing headlines